Florida led the United States in litigation with homeowners or surrounding homeowners insurance. We had 90% of all the litigation in the country was
moly.
right here in Florida.
Wow.
So if there were 100 lawsuits in the United States that revolve around property insurance, 90 of them were based in Florida. Wow. So it got way out of whack.
Yes. All right. Well, welcome back to Let's Talk Real Estate. It has been a long time since we have actually recorded any episode. And now, as maybe the audience can see, if the audience is watching this, we are actually on video. So, because I am asking my guest to actually be on video, and poor John is our first victim. So John Darr, so we have John Darr again on the show. He is the owner of Darr Schackow Insurance, and he is an awesome guest, and that's why we've asked him to come back, because you are a wealth of insurance knowledge. So John, thank you.
Oh, my pleasure. I'm honored to be here. I've enjoyed the podcast we've done before, and it's always a enlightening conversation about the wonderful, exciting topic of insurance. So,
yeah.
And in real estate right now, it's a hot topic for sure.
Yes.
So I'm glad to be here.
Well, thank you. Thank you. I'm glad you're glad, because we're going to talk about lots of things right now. And yes, so other than things like, the mortgage rates and all that a lot of people are talking about, insurance is the second biggest thing that I hear from my customers, because it's always evolving and it's a little bit scary, and especially first-time buyers don't know much about it, but even repeat buyers, people who have had homes before, sometimes have had them in different places that are not here in North Central Florida. And or the rules have changed and they do it so quickly that you just never know what's going on. So and it's been a long time since we've recorded this, so the rules have changed, I'm sure, since our last meeting together. So tell me, some things that are going on right now that are relatively new and that people really should know.
Yeah. So when I first started in insurance 30 years ago,
okay,
good Lord,
when you were
5, when I was 5, I never dreamed that I would have an inventory problem, right? Because insurance is just a promise. It's just a piece of paper that you take off a shelf and you go, hey, if your house burns down, we promise to rebuild it, right? So I'm thinking, I'll never have an inventory problem. Well, we have an inventory problem. So what happened, what I mean by that is the insurance companies that are doing business in Florida are really picky about what they will and won't insure.
Okay, yes.
So any of your clients that can be proactive about insurance will be worth looking into and doing, because the rules have changed. Right. They don't want everything. They don't want every house. They want to make sure that the roof is a certain age. The latest is the water heaters now have to be a certain age. So we're keeping the plumbers in business by getting them, to replace water heaters. So yes, it has changed dramatically. And it really comes down to the underwriting piece of the puzzle, which is, have you ever filed a claim? Are there trees over the house? Is the age of the roof 10 years or newer? Is it, and what happens is they tighten these underwriting rules so that not everybody's eligible, which makes it harder for those buying a house or even selling a house.
Sure.
Because if your roof is 18 years old and you're selling a house, it could be a real problem for the buyer. You might have insurance, but as a seller, but it doesn't transfer.
Yeah.
I had one the other day. It was kind of interesting. This person had 3 claims on a house that they owned in Georgia.
Okay.
Right? They're buying a house in Gainesville, and we had to search and search for insurance for the house in Gainesville that had no issues, had no problems whatsoever. But because she had 3 water claims on these houses in Georgia that she owned, the insurance company was like, oh, no. We are not offering her insurance, period.
That's interesting.
So,
I didn't know that. So
even if you're thinking that insurance just has to do with the house that you're buying,
mm-hmm.
and 2 of the 3, how about this? 2 of the 3 were investment property claims. So they weren't even on her primary home. She had 1 water claim on her primary home, but 2 other claims on investment properties where pipe broke and flooded the house. So now she's trying to buy a house here, and she's got this, it's kind of like having speeding tickets on auto insurance, accidents.
Yeah.
That's what the homeowners insurance companies look at it. That's the way they look at it. So it's really difficult. So Citizens, which is the state of Florida's insurance company, has doubled in size. There's twice as many clients that have Citizens, which is the state, mm-hmm. in the last year. It's exploding. Citizens has broader underwriting. They won't take everybody, but they have much broader underwriting rules. So if we're in a situation where we can't find insurance in the private market, then we have to go to Citizens.
Gotcha. Okay. So let's go back a little bit, because you did mention the roof 10 years or mm-hmm. newer, mm-hmm. Which is that is probably the biggest problem that I run into. Mm-hmm. Water heater, that's something I hadn't heard about. Mm-hmm. So, which fortunately it's a lot cheaper than a roof.
Right.
But
yes.
What's the age on that they're looking for now?
Typically the water heater needs to be 10 or 15 years old or less.
Okay.
So it doesn't have to be it's not that important as the roof, but even water heaters now are expensive to insure. I was talking to another friend of mine that had to get a new water heater, and they're like, have you priced those things lately? And I'm like, no, I haven't had to get one. And I think he said it was like $4,000 or $5,000 to get a new water heater.
Yeah.
And I'm like, ooh, okay.
It depends what kind, I guess.
Everything is expensive right now.
Everything's expensive. Exactly. Yes. So. Yeah. Well, tree removal is expensive. That's one. So you were mentioning trees over the house, which is a huge problem here in Gainesville. I mean, we have so many trees.
Beautiful trees.
We have gorgeous trees that hang over houses.
Right.
So over old roofs
yep.
with homes that have water heaters that are over 15 years
yes.
old. So
yes.
That's an issue right there.
Yes.
So yes. So tell me so you can't have...
So a lot of times what they'll do is they'll do an inspection. The mm-hmm. homeowner's insurance company will, and a lot of times this is after you've already bought the house, they'll come out and mm-hmm. do this inspection, and they'll send you a nastygram that says, hey, your house is not insurable anymore because of these trees are overhanging your roof. So if the trees typically if you think of it as the cylinder over your house, sure. as long as there's no trees hanging over that cylinder, you're fine. Mm-hmm. But in Gainesville, there's just every house almost has tree branches. Mm-hmm. Trees touching the edge of the roof is a big no-no. Uh-huh. That'll fail the inspection. So now, you have to go either find new insurance mm-hmm. So a lot of our agents try to be proactive about asking these types of questions mm-hmm. early on. Hey, send me a picture or an appraisal, or sometimes the listing. We'll go online and look at online and look at the listing and see if we can get a feel for, okay, here are the things that are going to be an issue insuring this house. So it's very valuable to be proactive and get early in the process and start getting with an independent agent that can help. There aren't many captive agents doing business here in Florida. There's a few. I don't know if State Farm, captive would be State Farm, Farmers, some of those, but I don't know if they're not doing a whole lot. But so anyway, proactively get involved, call an agent and say, hey, I'm interested in this house. We close even 30 days, 40 days ahead, 45 days ahead mm-hmm. and start giving them that information and letting them put together something. Because the worst case scenario is, hey, we close on the house, we wrote insurance, and 2 weeks after you move in, they send the nasty gram saying, oh, yeah, what your agent wrote, you didn't qualify for.
Oh, yes. Ouch.
And then you've got a mess of, now you've been canceled, which is another underwriting requirement. That's a question. Have you ever been canceled by an insurance company? Well, now you've got to answer yes.
Yeah.
Creates more of a curveball, and it just goes down this slope that you probably don't want to go down. So
for sure,
folks, agents in my office have been with me 25 years. So they're really good at what they do. And they're going to ask some questions that, frankly, you're going to go, why are you asking me these questions?
Right.
What does this have to do with insurance? And what they're trying to do is prevent you from being in that situation of, hey, so excited. I bought this house and I provided a great realtor experience for me. And 2 weeks into it, you've got no insurance.
Yeah. No, this is great information for a realtor, because now I know what to advise my clients, about. I mean, I kind of knew that the trees would be an issue. I definitely knew about the roof. Didn't know about the water heater, but the trees, I didn't know like that much about. Like I didn't know they absolutely couldn't be hanging over it and everything. So to have someone be proactive about that when you are looking at a house, factor in taking down the trees, or at least trimming them back significantly. But that's thousands of dollars right there. So that factors into your costs really upfront.
Yes.
So and I didn't know that the insurance company would then go out and evaluate everything immediately after, and then you could be dropped, which is a nightmare.
Yep.
So what do these people do? Like once they're dropped, what do you?
Yeah. So a lot of them end up with Citizens.
Okay.
So they end up with, typically a more expensive policy with Citizens, which, they've just moved into a new house. They may be stretching to get into this new house, and it's, it's not a good situation. So I would, try to proactively. Now, that's the bad. Let me tell you some good.
Okay. Yes, please tell me some good.
Because we want to make sure we hear good.
Yes.
So recently, there were 2 laws that have changed that I think will help the insurance industry go in the right direction. Okay. They came in and got rid of the assignment of benefits law.
Okay.
Assignment of benefits is a way for attorneys or public adjusters, which are sort of attorneys, to assume the rights of your policy and take over for you and sue the insurance company immediately, like right out of the gate, and try to get as much money as they can from the insurance company. And it's not that isn't needed sometimes. There's definitely a case for that in certain situations.
Right.
But it was being abused because Florida led the United States in litigation with homeowners or surrounding homeowners insurance. We had 90% of all the litigation in the country was right here in Florida.
Wow.
So if there were 100 lawsuits in the United States that revolve around property insurance, 90 of them were based in Florida. Wow. So it got way out of whack. So the assignment of benefits went away and they changed the law. And I think that will get us going in the right direction.
Yeah.
So that's the good thing. Now, it's not going to happen overnight. And it's going to take time for insurance companies to come back into Florida because we have hurricanes. We had Hurricane Ian.
Yeah.
Was it Ian? Yeah, Ian.
Yeah, I think so. The most recent one.
Yes, the most recent one.
The West Coast.
Terrible, huge amounts of damage.
Yeah.
That unfortunately made a couple insurance companies go bankrupt, leave the state. So it's not good. But I think with these changes in the law, they're gonna help get it going in the right direction.
Good.
So, here's the other term your listeners need to know.
Okay.
right? There's something called a wind mitigation inspection.
Yes.
Wind mitigation inspections typically cost $125. Don't hold me to that, but that's roughly what it should be.
Yeah.
And if you've got a roof that was put on in the last 10 years, 15 years, you're probably going to be glad that you have a wind mitigation inspection done.
Yes.
Now, the inspection just tells the insurance company what kind of hurricane clips, whether the roof meets 2001 code. It just tells the insurance company those things. It doesn't, if your roof doesn't have hurricane clips or some of that, it's kind of a waste. It doesn't really, it's not worth doing. Right. So you have to talk to your agent and say, okay, should I get a wind mitigation inspection done? Mm-hmm. And is it going to benefit me by having one of those done?
Yes.
They'll know the answer to that.
Yeah.
The other thing that is important for that will help is something called a 4-point inspection.
Yes.
You've heard of that, I'm sure.
I've heard of both, of course, but let's describe it for everybody who's watching or listening.
4 points: roof, wiring, heating, plumbing. So the 4 points are those 4 things, and that inspector will go in and do an analysis of all 4 of those things: roof, wiring, heating, plumbing. Mm-hmm. Plumbing has the water heater is going to be a piece of that.
Yeah.
And then once you have that 4-point inspection, the agent can then look at it and see what the ages of and the condition of all these things are, mm-hmm. and do a better job of trying to find a insurance company that wants to insure you.
Yeah.
So those are typically $100 also.
Yeah. And you can roll them all into the general inspection. So,
correct.
Yeah. I mean,
yes.
They would cost additional money.
It's an additional
over an inspection, right. General inspection.
But typically the home inspector will do
exactly
the 4-point, and sometimes they'll even do the wind mitigation thing.
Yeah, they will. They will. And sometimes they just do it, take pictures, and then if you don't want one, you don't have to get it.
Right.
But then if you do, it's great. It's been done.
Yes. Highly recommend doing that because it's going to make your insurance buying experience better.
Yeah, for sure. So what's interesting, so we're in North Central Florida. We don't get directly hit by hurricanes, yet we still have to have this wind mit inspection. So
mm-hmm.
Is there a reason? Is it because we're in Florida?
Yeah, it's just a Florida thing. And it a lot of times it just, like one of the things on the wind mitigation inspection, it tells you how long the roofing nails are. So did they use 6-inch nails, or did they use 9-inch nails, or what was mm-hmm. the length of the nail that they used for putting on the roof?
Right.
It tells whether it's a hip roof where it goes up on all 4 sides, or is it a gabled roof, which is typically a peak. Yeah. So it gives information like that. So.
Okay. And are there any advantages to having one kind of roof versus another?
Yeah.
Okay.
So hip roofs are less expensive.
Okay.
So you get a discount for a hip roof. And a hip roof, sometimes you see a hip roof is one that goes up on all 4 sides.
Yeah.
So the idea is that as the hurricane winds blow, instead of the wind getting up underneath the roof and peeling it off, it hits the roof and goes up the roof line no matter what direction the wind is coming from.
Oh, okay.
So it slopes upward. Yes, we're building a house, and my wife gave me a really hard time about having a hip roof. I'm like, honey, it's an insurance thing. I want a hip roof. And she's like, okay, whatever. So, but a gabled roof has typically a gable. Uh-huh. And what happens is the wind hits that gable and just will pull that roof off. So what they've done, they've done studies and that have found that hip roof perform better in a hurricane than a gabled roof. So now that's part of the wind mitigation inspection. You get a discount.
Yeah. Oh, that's great.
Discounts are good.
Discounts are great. They're wonderful. They're a beautiful thing.
Yes.
Yeah,
Anybody that's listening is now just tuned in. Okay, discounts. How can I get discounts? Because my homeowner's premium is doubling and tripling, and it's crazy.
Yeah. Well, we just renewed our home insurance, and or not renewed our home. We just replaced our roof
Mm-hmm.
because we didn't want to be dropped
Mm-hmm.
from our home insurer.
Mm-hmm.
And then they had to do a wind mitigation, to make sure that everything was right.
Yep.
So, and I don't know if that lowered our insurance or it just,
I'm sure it did.
yeah. I don't know. I don't take care of that in my house.
You're not in charge of that.
I'm not in charge of that. So, which
Alex,
is great.
yep.
Alex
His
does
job.
it. And that makes me very happy.
Right.
He handles all that.
Right.
So yeah, but yeah, so that's great news, to know. Is there any other way to get a discount?
Yes. So what I would advise people is if you can find a carrier that will bundle your home and auto, it's worth looking into because companies like AAA will do home and auto.
Okay.
Progressive, home and auto. Tower Hill has a program with Safeco that they've partnered with Safeco, and they said, okay, if you have your house with Tower Hill, your auto insurance with Safeco, you're going to get a discount, typically 10 or 15% off both.
Okay.
Let me think. Oh boy, some of the other ones are Nationwide.
Okay.
Nationwide will do both the home and the auto, and they'll have that discount. So there are some options for combining, and I would strongly suggest right now trying to combine the two because it just makes sense.
Sure. I mean, it makes sense, especially if you get a discount. Is there a reason why you get a discount if you insure both?
Yeah, so it's just the carriers wanting to maximize their profits. So in other words, the insurance companies have done studies that have said they've looked and said, okay, these people that have both their home and auto insurance with us tend to file fewer claims.
Oh, okay.
So we're going to give them a discount to combine both, and versus these people that may have their auto insurance with one company and home insurance with another and boat insurance with another and RV insurance. They tend to file more claims. So it really is about claims frequency thing is why they give a discount. That's
interesting. And so here's a thing that I just thought of is if you have claims on your auto, does that affect your home insurance if you've got both?
Does not.
Okay.
Thankfully, don't give them any ideas.
Okay, scratch that.
Yeah, edit that.
Never mind
that. But no, they don't. It won't affect the home insurance. It will greatly affect your auto insurance.
Sure. Yeah. I mean, of course, claims.
Auto insurance is, I don't know if you want to talk about this right now, but auto insurance has gone through a really interesting time.
Okay.
We had this thing called COVID.
Really?
Everybody.
What? What was that?
Everybody sat at home and didn't drive their car.
Great. Yeah.
They didn't go anywhere.
Yeah.
So the car insurance companies made record profits.
Oh, yeah. Of course.
They didn't pay any claims.
Yeah.
COVID happens. Now we're free to wander and be out and about. So we're driving again. And they can't get parts to fix these cars.
That's right.
So what's happening is not only is the technology in your vehicle is way advanced from even 4 or 5 years ago. There's a sensor in every square inch of your car. They can't get the parts to fix these cars. So what happens is you have to stay in a rental longer, which means they have to pay more out for rental cars. The cost to fix the bumper or the mirror or the whatever it is you've run into has doubled because the parts are harder to get. They're more expensive. So auto insurance has gone from prices going down and companies giving rebates to prices are skyrocketing because the loss rate, what they call loss ratios, are through the roof.
Wow. So
it's this knee-jerk situation of really a good time to, oh my gosh, this is terrible. I mean, I've had clients that the car's been in the shop for months.
Oh yeah.
They either can't get a part, they can't get a chip, they can't get mechanics to work on it. It's insane.
It is.
So all that costs the insurance company more money than they had planned. So you're seeing rates on car insurance go up as well, unfortunately.
All right. Yeah. Yeah, I can imagine. Okay, so one aside, if you're buying a house and you're under contract, do not get a car.
Don't buy a car.
Don't buy a car. Yeah. Don't do that.
Your mortgage person, your loan officer, originator is going to yell at you.
Very much so. Yes. Don't get a new credit card or anything like that. But that has nothing to do with insurance. But I felt like I needed to throw it out there.
It's a great
just
point.
In case people are thinking, oh, great, I'll get a car, I'll get a house, I'll get both. No.
Don't do that.
Don't do that.
Not until you're closed on the house.
Exactly. So yeah. So, okay. So what, gosh, I can't even remember the last time that we did talk about this. So I probably should have listened to our former podcast episode, but yeah, I just didn't know what other developments there have been, in the state. Is the state changing itself, or is it just nationwide? There have been lots of changes.
No, it's a good question. It's mainly Florida, frankly. Okay. When COVID happened, everybody or a lot more people could work from home. Mm-hmm. So what I'm sure you've seen and we've seen is people moving to this area that really don't have any ties or reason to be in this area, other than it's much nicer than
living in an
somewhere
apartment.
else.
Right.
In an apartment, or I don't want to give an example because somebody's going to go, oh my God. Yeah. Iowa's a pretty state. Oh, I'm sure it is.
Exactly. They're beautiful states.
They're all beautiful states, but it's warmer here than it is in Minnesota.
It is.
So people are like, well, if I'm going to work from home, I might as well work from home in Gainesville.
Exactly.
Great town, great city. So that has further impacted the sheer number of people that are moving here. It's crazy because a lot of these people have not gone back to the office.
Oh yeah.
The businesses are like, wait a minute, we can get rid of all this overhead. Mm-hmm. We don't have to pay utility bills, rent, have all these people work from home.
Yeah. Now, have claims increased as a result?
Yes, that's what's coming. So that's the future, is now that all these people are working from home, when they get up and they trip over the dog and fall and hurt themselves, is that a work comp claim?
Oh, that's
or is that just an accident?
Yeah.
So that's what's
interesting.
That's what they're seeing ramp up. They're seeing a lot more of those situations where they never saw that before because people didn't work from home. When they were home, they were not working.
Wow, yeah.
But now they're working and things happen in the home, and that's the one, although the one line of insurance that is decreasing is workers' comp insurance.
Well, that makes sense.
There's fewer people, there's fewer mechanics, there's fewer accidents happening on the job because there's fewer people doing that kind of stuff.
Sure.
So it's interesting because home and car insurance is going up, but workers' comp rates are coming down.
Wow. Okay. Well, yeah, that makes perfect sense.
It's an interesting dynamic.
Yes. So going back to insurance and premiums and all of that, what would I guess you can't tell me how much it would cost for an average person because we don't know the specifics of a house. But let's say
I used to be able to, not anymore.
Okay. All right. So because I was going to throw something out at you there, it was saying 3-bedroom, 2-bath, 10-year-old roof, 5-year-old water heater, no trees hanging over it.
Yeah. So I'll talk a little bit about what affects the rate. So that may give people some insight into, what does affect the rate? What should I be looking for? When I'm looking for a house, what should I be looking for?
Okay.
So there's a couple of different ways that they rate. There's a wood frame home, which is wooden studs, wooden walls, wooden roof trusses, and And that we call frame. And the insurance company rates that as wood or frame. They call it frame.
Which is what we mostly have here.
Correct. We have most of what we have here is wood frame. But we have a lot of hardy board here.
Yes.
Which is a masonry lap board type material. So if you have a house that has hardy board or hardy plank, I think is the brand name, some insurance companies will rate that as masonry or what they call masonry veneer, similar to a brick home. It's less likely to burn down if it has a masonry veneer structure, exterior, than if it's just wood. Because if you've got a wood stud and you've got T111 wooden siding, that's just fuel for a fire.
Oh, yeah.
So when you're looking at houses, wood is going to be the most expensive, but a wood frame house with hardy plank or hardy board is going to be a little bit less money.
Okay.
Similar to a brick home. The best situation is a concrete block masonry structure with steel roof trusses.
Okay.
Very rare.
Yeah.
I don't know that I've ever seen it, but that's the most ideal. And sometimes they call that fire resistive, but it's very rare. Most of the time it's a concrete block with wood trusses. So they call that joisted masonry, JM, and it's less expensive than masonry veneer.
Okay.
So if you just look at the construction of the house, when I said earlier that your agent's going to ask you weird questions that you're going to be like,
but you need to
I don't know the answer to. It's
Yeah.
maybe there's hardy plank or I don't know, it looks like wood.
Right.
Well, if you know those details, you'll get a better rate.
Definitely. Yeah, I get that. How about stucco?
Stucco is a masonry veneer sometimes.
Okay.
Sometimes they don't care about it and they say, nope, it's a frame house. So it depends on the carrier. The insurance company is the one that files rates with the state, and they file all those rules and they say, okay, here's how we're going to rate stucco. Whatever, frame, masonry, veneer, that kind of thing.
Okay.
So stucco can be good, but be careful about stucco. The one thing with stucco is if it's what they call IFIS or EFIS, it's EFIS stands for EIFS, stands for Exterior Insulated Finishing System. It's Exterior Insulation Finishing System. So what happens is the stucco is on the outside and the insulation's in between the wood stud and the stucco. Well, if that gets wet, it's a mess.
Oh, yeah.
So some older stucco is EFIS. Now the stucco is just there's not a layer of insulation in between the stucco outer shell and the inside.
Okay. All right. Good to know. See, that's
so exciting.
Do we have it is, I mean, it's exciting. It's good to know. I mean, it's super important.
Yes.
So is there a year like where that changed more or less?
Not really. They stopped doing EFIS I would say probably mid-90s.
Okay.
Late 90s. You don't see it. When it got into the 2000s, you don't see it quite as much as you did in the 90s.
Okay. That's great to know. If you're buying a house from the mid-90s or even late 90s and older, something to think about for sure.
Yep.
So yeah.
Alarm credits are always worth having.
Okay.
In my opinion. So you've got a monitored alarm or a central alarm. You've got just a regular burglar alarm that makes a loud noise and nobody really ever comes. And, that gives you a little bit of a discount. There's also I forget the name of the system, but it monitors it's a water flow meter.
Yes, I've heard of that.
So we recommend putting in a water flow. Now they have them set up so that it literally will alert your phone if there's water running in your house. So if you're on vacation and you get the alert that, hey, there's water flow at your house, either the neighbor's over taking a shower or
or it's a nightmare scenario.
Or it's a nightmare scenario.
Yeah.
And you can literally use your phone to shut off the main and prevent because you do not want a water claim. Water claims right now are really not fun. And it's a huge black mark on your history, your claims history.
Gotcha.
And it's sad because it really, I mean, I've never known anybody to want a water claim. It's a mess. You got to replace the floor. You live in a construction site until they get all that done. So nobody in their right mind would want that to happen.
Yeah.
But it is a real issue for getting insurance if you have a water claim. And especially if you have 3 or 4, like my lady friend had that.
Yeah.
We couldn't find insurance for hardly.
Yeah. Now, does it affect the person who's buying the house?
Yes.
That it had a water claim also?
Yeah. So there was another situation where somebody was buying this house, and the person buying the house never had a claim, never filed a claim. Uh-huh. But the person that was selling the house had filed a water claim. Well, that counts against the person buying the house.
Oh, okay.
Because what happens is sometimes with older plumbing, the plumbing will get brittle and break. And if they have a water claim and they didn't replace the plumbing,
right,
the insurance company looks at it as, oh, it's going to happen again.
Sure.
We know it's going to, I mean, if the plumbing's not replaced, we don't want any part of it. They won't even quote it.
Yeah.
So yes, it will follow not only the buyer's history, but it'll also follow the seller's history of have they filed any claims on that house.
Wow. Okay, so if there has been a water claim, but the plumbing has been replaced, then
you're a little better off.
You're a little better off. You're not in the clear.
It's not great.
Okay.
It's still it's like having a not at fault accident. You know, it's there's a history there, and it will prevent. Some carriers will not quote it at all. Some insurance companies will go, look, we're not going to quote it. It's not eligible. So you know, if you've got 30 home insurance companies in Florida, now you've narrowed it to 5, which may be still the least expensive carrier is going to give you a quote. Great.
Hopefully.
But you don't have as many options.
Right.
So,
okay. So let's see. We've covered roof. We've covered water heater. We've covered plumbing. How about electrical? Like what kind of electrical would not make your house insurable? I mean, I know the answer, but I want you to tell us.
Yeah. So there's a certain level of, and I'm not an electrician by any stretch of the imagination, but there's a certain level of, is it wattage or the panel has to have a certain level of breaker. Mm-hmm. And typically it's a 100 amp panel or more is going to be fine. Uh-huh. And I'll try to send you the types of electrical panels that aren't eligible, and maybe we'll put it in the comments.
Okay, yeah.
So that people can see, okay, if it's I'm drawing a blank on the name. There's one of them that's definitely not eligible and it will cause you problems. And it's just the type of electrical panel and the way the breakers are or work in the house in the electrical. So if the electrical is old, then you might have an issue that you need to address. But again, I would talk to the agent, and it's going to be on the 4-point. So they're going to see what the type of the panel box is and the type of the wiring, you know, what's the stuff, the cloth wiring.
Cloth wiring. Yeah. That's a big no-no.
Big no-no.
And that's from houses from the 60s and all of that have that, you know, and older, of course.
Yeah.
But,
I don't know who thought putting cloth and electricity together was a great idea, but
no idea. And they also do things called double tap. So they put 2 into 1, which is also a really bad idea.
It's a big no-no.
So yeah. So I know that those 2 are something to look for when you're looking at the house, actually. And sometimes you can't tell if it has cloth wiring, but at least it's a question to ask.
Yep.
Because the seller might know. But then definitely the inspector will.
We ran into one that had cloth wiring, but it wasn't actually in use. So they rewired the house, but they didn't take out the cloth wiring that was there. So it wasn't being used, but it was in the house. And the insurance company, it showed up on the inspection. You know, the inspector found it. But we had to go back to the insurance company and say, look, it's not even connected. And they said, look, we don't care. We want it out.
Yeah.
Or we're not going to quote it. It's fine with them. They've got plenty of business. So again, it goes from instead of 30 carriers to quote from, we've got 5.
Wow.
Does that make sense? So
yeah, that's interesting.
Mm-hmm.
Yeah. So those are the things that homeowners or potential homeowners have to look out for.
Mm-hmm.
And current homeowners who are looking to sell have to also address those issues.
Absolutely.
Before selling.
Yes. I would tell you, if you're a seller, let's say you're a seller and you're like, look, I just want to sell them. I want to sell my house.
Right.
I would still call an agent and say, hey, I'm selling my house. What could that potential buyer have to deal with when they come in and try to buy my house? Because if you can get ahead of that, you're going to have a much better selling experience than you are if you don't, because it's going to show up. Somebody's going to find that you have cloth wiring.
Exactly.
And you're going to be in this situation where, oh God, we got to get an electrician. We got to get the cloth wiring out, and they want to move in 2 weeks.
Right. Not going to happen.
So
that's not going to happen.
So, a lot of times I'm sure the sellers are like, look, we want to get rid of this house, sell it. Anna, sell our house for us. Great. But you're going to have curveballs at the finish line.
Sure.
That you don't want if you can prevent it.
If you can prevent it. Right. Which sometimes, you can because of time issues or whatever. So, so I don't know, necessarily what somebody does in that case. The problem I've had lately with some of my buyers is that, or some of the people I'm working with who are buyers, they're not my buyers, but they've purchased homes that they're going to renovate and they're not going to move into right away. So it's not considered because they're homestead or whatever. And so they're having issues acquiring insurance for those. Why is that? Why are they?
Yeah. So great question. And this is, I'll try to give you some really good insight into what to do in this situation. Okay. So typically homeowners insurance carriers and those that insure properties that are rental or investment properties are occupied. They're either occupied by their home, the owner, or they're occupied by a tenant.
Right.
But when you've got a situation where you've got 3 months of renovations that are going on, it doesn't.
That would be a great scenario. 3 months only.
Yeah. That would be an optimistic at 3 months. It doesn't fit in the categories that the home insurance companies want.
Okay.
So they want it to be occupied and somebody to be there every day checking on things and, white picket fence and all that.
Sure.
So what I recommend you get or talk to an agent about is what they call a builder's risk policy.
Okay.
Similar to a house that's under construction.
Yeah.
Builders buy builder's risk policies so that they cover it while it's a construction site.
Okay.
The average homeowner can get a builder's risk policy in that situation. That's much easier to get. It's actually more of a commercial policy than it is a personal lines policy. So a builder's risk policy won't make you jump through certain hoops. Now, what you have to do is ensure the existing structure that's already there, and you have to tell them, okay, I've got $75,000 worth of renovations. We're going to redo the kitchen. We're going to redo the bathrooms. We're going to put new floor, whatever you're doing. So you actually have to say, hey, here's what we're doing, renovating this. Here's what the existing structure is worth. And then whatever that number is, you've got to make the bank happy if you've got a mortgage.
Yeah.
So the bank goes, hey, we're loaning you $500,000 on this house. We want to make sure it's insured for $500,000.
Sure.
So you may have to go, okay, the existing structure's replacement cost is $400,000 or $425,000, and the renovations is $75,000. So it adds up to $500,000.
Okay.
So you have to, and there's some leeway there that the insurance companies give you some leeway on that. So you don't have to be exact, but you have to be close. So hopefully the mortgage company's not loaning you $500,000 on a $100,000 house. You could have a problem. But
Right.
the point is, there is a product out there called a builder's risk policy that you're going to have to know a little bit about when you talk to your agent and tell them, hey, here's what we're doing. We're going to buy this house and we're not moving in right away.
Right.
We're going to renovate it. Oh, okay. The agent should know let's write a builder's risk for 3 months, 6 months, a year, however long we need to write it while you're renovating this house. And then when you're done, we can write a regular HO3 policy, homeowner's policy.
Sure. And is it a lot more expensive to get the builder's one?
It's not.
Okay.
It's really not. It's not that much more expensive, and it's covered correctly.
Yeah.
You know, I tell people all the time, what's the most expensive coverage you can buy? It's the policy that doesn't cover when you have a claim.
Right. Yep.
So if you buy a homeowner's policy on a house you're renovating and not living in, what happens is the insurance company comes back and goes, oh, wait a minute. You weren't living in this house.
Yeah.
This wasn't occupied. On the application, you said owner occupied. Yes.
Yeah.
So what they do is they give you your premium back. Hey, Mr. Jones, thanks. Here's your premium. Oh, by the way, there's no coverage. So you just bought, in my opinion, the most expensive insurance you could ever buy if there's not covered. So try to answer the questions, be upfront with the agent, and tell them, because they're really trying to prevent you from not having something covered. In a lot of cases, it's people's largest asset.
Of course. Yeah. So I have a question, and this might be my last question. I'm not going to keep you this long or this much longer. But deductibles. So if you have a higher deductible, will your insurance be lower?
Yes.
Or will you? And are you more likely to obtain insurance from a carrier that wouldn't?
Another great question. You're really good at this.
Thank you.
So yes, it won't affect the fact that whether you get insurance or not get insurance. But I try to tell people right now, with the market and the industry where it's at, try to take as high of a deductible as you can take. It will save you a little bit of money. You know, typically we see $1,000 deductible now. I try to tell people, look, if you can stomach and go to a $2,500 or maybe even a $5,000 deductible, now's the time to do it. It might only save you a couple $100, but really you don't want to make claims right now if you can not make claims.
Right.
Somebody steals a bike out of the garage, don't file an insurance claim. It's just not worth doing. So unless your bike's worth $50,000, whatever.
Sure.
So I try to tell people, go with a higher deductible if you can stomach it. If you're living paycheck to paycheck and you go, hey, I don't have $5,000 in my checking account right now that if I had to file a claim I couldn't come up with, stay at $1,000.
Of course.
But if you can swing it, go with the higher deductible, and pay attention to hurricane deductible or wind deductible.
Okay.
Those are two different things. There's an all other peril deductible, and then there's a wind deductible.
Okay.
Typically that's a percentage, 2% or 5% of whatever the house is insured for. So let's say you got I don't know what the average house is in Gainesville, $300,000 house.
Yeah.
Something like that.
We'll say that.
Say that for those mathematicians out there.
Exactly.
$300,000 house. So you've got a $300,000 house, and let's say you've got a 5% hurricane deductible or wind deductible. That means your deductible is $15,000. So Hurricane Ian comes through, blows the roof off your house. You've got to come up with $15,000 before the insurance company starts paying anything. You can get a 2% hurricane deductible or wind deductible, and now it's only $6,000.
Yeah.
Pay attention to what the hurricane wind deductible is, because typically the difference between 2 and 5% is pennies. And if it's a wind event, it's you're much less penalized than if it's a theft.
Okay.
Or a water claim.
Okay. Because it's an act of nature. Okay.
They say, look, they didn't make the tornado. It just happened.
Sure. Okay.
So so I would say, 2%, if you have a choice some carriers offer a $500 wind deductible. Okay. Look at that. You can see if it's worth paying the extra premium to have that low of a deductible, but look at it and see if it's worth doing. Yeah. But on the all other peril deductible, go as high as you can.
Okay. All right. So I do have one more question. I lied to you earlier.
Unlimited.
I have.
Yes, it's all good.
Flood insurance.
Yeah.
Because we don't think that we're going to need that in North Central Florida.
Yep.
No ocean.
Yep.
And around here, not that many lakes either.
Not that many lakes. Yep.
Or rivers
Yep.
even. We have one.
Yep.
But people do need flood insurance here in many areas. We have creeks
Yep.
and just low-lying areas or whatever. So do you recommend getting flood insurance? And even if you don't need it, maybe.
Mm-hmm.
And if you do need it, then what does that tack on to your typical insurance policy?
Okay, another great question. So flood insurance, there are two programs with flood insurance. The National Flood Insurance Program, which is the government. And now there's private flood insurance.
Okay.
There used to not be private flood insurance.
Right.
It was all National Flood Insurance Program flood insurance. We recommend you get flood insurance. Every house is in a flood zone of some sort.
Okay.
So don't let everybody say, you'll hear, oh, it's not in a flood zone. Okay, that's not right. Every single house is in a flood zone of some sort. There's a low risk zone and there's a high risk zone.
Okay.
If you're in a high risk zone, the mortgage company typically is going to come and say, hey, you got to have flood insurance.
Right.
Here are your options: National Flood Insurance Program or private. It's interesting. The private flood insurance market is really interesting market right now because it's new. They don't have the history, and the actuaries are still sort of trying to figure it out. So you can get some really great deals on flood insurance right now for the certain type of house that fits into that category, so to speak.
Okay.
The other thing that if you have flood insurance, you can be grandfathered in at some level for the buyer. So let's say let's say your house shows up in a flood zone of some sort where maybe the house isn't in the zone, but the property's in a flood zone.
Exactly.
I'm sure that happens.
I'm selling one now.
Okay.
Yeah.
So if you can get the seller to buy flood insurance, then it will make it easier. They can transfer that policy to the buyer.
Oh, okay.
So flood insurance is one of the few policies they can transfer to the buyer. Okay. So it just it eases the buyer's mindset of, hey, what is flood insurance going to cost? If the seller didn't have flood insurance, but now the buyer's got to have it, what does it cost? How does it all work? That kind of thing. Well, if the seller buys it, it can be transferred. And I would shop flood insurance. It used to be flood insurance was the same price. Didn't matter what carrier you get it from. Now with the private market, it is very different. It does. Okay. It's a more competitive, and flood insurance rates are coming down, which is odd because there's lots of floods. But I think the market is such that there's more competition. So they're trying to compete. Yeah. So if that would be my guidance on flood insurance is, again, talk to your agent and ask them, hey, what does flood insurance cost? Even though I might not be in a flood zone, a high risk zone, sometimes that's the best time to buy it because it establishes that baseline or whatever.
Okay. All right. Well, that's great. Okay. Last question.
Okay.
Is there anything that I haven't asked you that you'd like to talk about?
No, not really. I can't think of anything. Okay, so one thing.
Okay, good. Yeah.
So when you buy car insurance, focus on uninsured motorist in your car insurance.
Okay.
Unfortunately, there's a lot of people out there that are driving around with not very much coverage.
Right.
An uninsured motorist is the only part of your policy that covers you.
Okay.
So if you get injured and you can't go to work and you're disabled and you're in a wheelchair, chances are the person driving that other car doesn't have enough coverage. So you go back to your own policy and collect what you should have collected from that other party
Right.
on your own policy.
Okay.
So just pay attention to how much uninsured motorist coverage you have. Don't necessarily worry about the bodily injury, because there's bodily injury and uninsured motorist. You can't buy a whole lot of uninsured motorist without buying bodily injury. They go like this.
Okay.
So if you're going to buy more uninsured motorist, your bodily injury is going to follow.
Okay. All right. So yeah, that's good. And bundle it with your home insurance.
Exactly.
There you go. All right.
One more thing, save money. I have a save money tip.
Save money tip. We
Save
want
money
that.
tip.
Ding, ding, ding.
Now these auto insurance companies have ways to monitor your driving.
Okay.
So if you drive like me, I drive like a grandma. I don't go very fast. I'm like a tortoise. You're going to see a significantly lower rate if you drive safer. And now the auto insurance companies will monitor your driving habits. So sign up for their program. Everybody I recommend this to goes, oh, Big Brother, I don't want Big Brother watching me and where I'm going and what I'm doing.
Yeah.
Well, let me give you a little tip. You carry this around.
Right. You carry your cell phone around.
If you carry your cell phone around, Big Brother knows where you're at.
Exactly.
I mean,
there's no secrets.
There's no secrets.
Exactly.
So get over the fact that, I don't know what people are afraid of, but don't worry about the auto insurance company tracking where you're going, because they don't care, but they do want to see how you got there. And did you slam on brakes 5 times before you got to wherever you're going or not? And that's the thing right now, because we're seeing people save 20 and 30%.
Oh, wow.
On their auto insurance, significant dollars if they drive slow.
Okay. I don't know if my car has that. It probably doesn't because it's too old.
Now they tie it to your phone.
Oh.
So even if you can't plug in the device, they'll let you sign up and use your mobile phone so they can see how fast you're going, what time of the day you drive is a big deal. So, like your mother always told you, nothing happens good after midnight.
Right.
If you're driving at 2 a.m, it's probably not a good, you're probably coming home from the bar.
Exactly. Yeah, no, that's true.
So, so a lot of that has to do with when you're driving. They measure that. So I would say money saving tip, sign up for the plan if you drive somewhat normally. Now I say that because I've had many people say they are the best driver in the entire world. They've never gotten an accident, and they get their report back at the end of the 6 months, and they are not the best driver in the world. So just know that it will tell you what kind of driver you actually are, and be aware that it might be not good.
So it can go up.
It can go up.
Oh, maybe that's not a good idea.
So if you're flying around and not going the speed limit, maybe not a great idea, but slow down, drive safe. There's way too many accidents out there right now.
Is there an advantage for like a Tesla or something like that will monitor how you're going, and if you're going into a lane or, Yeah,
there's definitely now the auto insurance companies know by the VIN number what safety measures it has.
Okay.
So yes, it's built into the rate. So it's because some of these, I was driving my dad's car the other day and the seat vibrates, and I changed lanes and the seat vibrates. There's an alarm going off. It was like, whoa.
Mine does that.
I didn't put my turn signal on, and it was freaking out because I changed lanes. So anyway, which is, I think it helps those people out there that drive a little wild and, hey, don't change lanes unless you're turn your blinker on or whatever.
Exactly. Yeah. Yeah.
So.
That seat vibrating thing is the most interesting thing, because mine does that. And I have to tell my clients who are in the car with me that my seat's vibrating because of whatever reason, because there's a car behind me.
Right.
Like if I'm trying to back out of a space or something,
Yeah.
there's a car behind me. It's just warning me.
Yeah.
Because otherwise it sounds really funky.
Oh yeah.
So everybody wonders like, what's going on.
I was amazed. Like I said, I was driving my dad's car and I'm like, what is going on? This is, I'm about to be ejected from this car for some reason. And I drive like a grandma. So
Yeah.
anyway.
All right. Well, great. Well, great advice. Homeowners insurance, car insurance, bundling those insurances together, doing all of the preventative measures to get the best insurance rate possible.
That's right.
And now we know what the house needs, the criteria that's ideal to get you the best rate out there and the most options with carriers. So
Absolutely.
yes. So thank you, John. You're awesome.
Watch Anna's podcast and save money.
Yes. I like that. That is great advice.
So
Yeah. So we're going to put it out there now.
that's right.
Yeah.
Sure.
Awesome.
My pleasure.
Thanks. Thanks, John. All right.
pleasure.
Until next time.
Until next time.